Hello everybody! Thanks for being interested in our video in which we would like to show you one example of monthly reports that we prepare and thus give you an insight into the added value you can expect from us. This report is prepared with leading BI tool Microsoft Power BI. The data are not real and they serve only for the purpose of this case. In order to understand this report, we should really quickly look at the organization chart of this imaginary company. So let's jump to it. So this is a company which has 4 various departments here in blue, which work together on 13 projects at the same time. So these blue departments and projects are profit centers who generate revenue and costs. And then we have supporting departments here in green. And these are cost centers because they generate only costs. Okay, I hope this is clear. So now let's dive into the report, where we will focus mainly on the performance of the company as a whole and of these blue departments and projects profit centers. Here on the first page we have an overview showing us key info about the performance. We can see that data that are currently shown are for July 2020 year to date and in million Swiss francs. However, this report is dynamic, which means that we can choose a period we are interested in. But before we switch the period, keep in mind that here we have 7.6 million revenues and that here comment refers to July 2020 year to date. So if I switch to March now, for example, what happens is that chart changes. Here we have now 3.3 million revenues, but also comment changes. Now we can see that it refers to March 2020 year to date. And now before I explain this first chart, I would like to show you the whole P&L so that it's crystal clear what each item represents. And here we can go directly to whole P&L. So here we are on the next page. Let's first focus in P&L structure. Here we have revenue broken down by markets. This is clear. Then we have project direct costs. These are costs that are inevitably for us to deliver our services. These are costs of services sold. In other words, these are costs that we can allocate to one or more specific projects. Content-wise, if we are talking, for example, about software development company, these are mainly salaries of developers, and besides that also some minor other costs, such as, for instance, training costs or maybe a business trip, meetings, or any other type of costs, which on one hand were needed for delivering our services, and on the other hand, which we can allocate to one or more specific projects. And now if we deduct project direct costs from revenue, we get margin, gross margin. And this should be the first KPI we look at when we monitor the performance of individual project. In essence, each project should be in long-term positive at this level. It means it should create some margin in order to make a contribution to covering OPEX. Further down, all items are pretty standard, so I don't think I have to explain a lot. But what is worth mentioning are columns. Here the variance to previous year in absolute and relative values are shown visually. This way we can immediately notice any important and big variations. For example, here we can see that our revenue grew a lot and that is mainly because of higher revenue in domestic market, for this EU market, and not so much in USA. Or maybe, for example, we can also notice that margin grew more than operating expenses, which means that we are on a good way to increase our profit. So much about P&L, and then here on the right side we have a comment, which is dynamic, the same as the one we saw before. And then here we have one of the most important KPIs, net profitability. This is percentage EBT in revenue in this year, previous year, and variance in percentage points. So here we can see that in June our profitability was lower than last year, 1.9 percentage points. And finally, if we would like to see what has been happening over months, here we have also an overview of key P&L items over month. We can see that revenue in this year has been higher than last year all the time. The same was happening with margin, but for example, if we jump to EBT, we can see that here it was not the case. So I hope everything is clear. So now let's go back to overview and explain it. Okay, here we are back in overview, and here we can see key P&L items with one difference, that all values are shown visually, not only variances. However, if we prefer numbers, we can simply click here and change view. Here you see we have only numbers, but let's go back to the visual. Here we have another important information, percentage EBITDA in revenue, and we can see that it fell. Okay, and now it's time to go slowly a bit further and look at the margin by departments, which is shown in this chart. Here we have those 4 blue departments, if you remember from organization chart, and we can see that 2 of them performed much better than previous year, 1 just a little bit better and 1 worse. We can always choose what type of chart we see by clicking here. And for example, this is waterfall chart. Here we can see margin previous year, margin actual, and here how much did each of the departments contribute to this growth. Before we dive deeper into departments and projects, let's just keep in mind, for example, department HERA, where margin fell. Let's find out why and go here to the next part of the report. Here we have a detailed overview of margin by departments and projects. Let me first remind you that this report is dynamic. Here you can choose period, here type of calculation, department and project. At the moment, ZEOS is selected, which you can see here, and also here in the comment. You can see that the comment refers to July 2020 monthly ZEOS. So here you can see the results for selected department and project. And here you can see revenue and margin for all projects within selected department. We have another overview only by project, so let's just quickly look at it. Here we can see all projects at the same time. They are sorted by revenues, so we immediately see which are bigger and have stronger impact on overall business results. We can also instantly notice which operate better and which worse than last year. These with red, they operate worse. And here by side we also have an overview of projects by margin percentage in this year. So we see which projects generated negative margin in this year. For example, these are 2, Icaria and Corfu. But we said we want to find out what happened at HERA. So let's go back to previous view. So let's switch to HERA and see what happened. We can see that revenue grew 5.6%, 11.9% in domestic market, and a fall in other markets. But on which projects? We can see that here. We can see that in Kos, Andros, and also in Karpathos, revenue grew, while in Corfu and Icaria it fell. On the other side, margin fell 7.7% due to 2 big increase in salaries here. But on which projects? We can see that here, if we switch to margin, we see that margin fell in Corfu, Icaria, and also a little bit in Karpathos. So now let's look, for example, at this Corfu a little bit closer and choose here Corfu. And monthly. We can see that revenue started falling already in previous year and is still falling. And if we switch to margin, we will see that similar has been happening with margin as well. It has been negative since February this year. Here we can choose the type of chart we prefer, just as it is the case in all charts. Here we have simple line chart, Waterfall Chart, and another one with absolute and relative variances. Here we can see that margin fell 161% compared to previous year, where revenue fell 65% and project direct costs even grew. This is unimaginable and requires further investigation. At the moment, based on this info that we have, we can conclude that management is acting too slow because the fall in revenue is not followed with sufficient enough fall in costs. But we in our report will stop here, although in reality this is where action begins. The content behind these numbers needs to be found and action is to be taken. With this, we are almost at the end of our report, but to get a comprehensive picture of the performance of this company, we shouldn't overlook OPEX. So let's go back to overview to look at it. Here we are back at dashboard and we can see that OPEX grew 23% in total. Here we have OPEX by type, values actual previous year and variances. Here we have another info, OPEX percentage in revenue, which grew 13%. Let's now jump directly to OPEX in detail to see what's happening. Here we are on the last page of our report, and if you remember from organization chart, we had 3 orange departments which were cost centers. These 3 we can choose here, general, management and sales. We can however also choose all of them like it is now. So we can see the total OPEX grew 23% in July compared to previous year, and here we see all types of OPEX. Here at the side we can also see what has been happening with OPEX by month in each department. And now let's choose, for example, management. We can see that total OPEX in management grew 39% and that the biggest type of cost is labor costs, which grew 33%. Further down, the last thing is overview of top 3 OPEX types by month, which are salaries, tax and consulting, and lawyers. I think this is clear and I don't have to explain further. With this, we came to the end of the report. I hope you enjoyed watching this video. We at DG180 can prepare such reports also for you, and for further information you're welcome to visit our website. Thanks for watching. Bye!